Welcome to WHU Inside Business. I'm Katrin Bähdorf, Director at the Center of Asset and Wealth Management here at WHU, and I'm very happy to welcome Dr. Tim Thabe, one of the founders of creditshelf, a fintech startup founded in 2014 and specialized on unsecured working capital loans for small and medium-sized enterprises. Could you explain the general concept of peer-to-peer lending and the way creditshelf is implementing it?
Sure. Thank you very much for having the opportunity to explain our business. Peer-to-peer lending actually originated in China many years ago, where state-owned banks typically finance state-owned companies, but other companies are looking for capital and it's very difficult to find. So people in a digitally affinitive environment found a way to disintermediate a banking system by going basically around it and connecting the investor and the lender directly. So that was basically the origin. And shortly after, it started also in the US and in the UK, where people originally wanted to refinance credit card receivables of consumers through investors who were also consumers and wanted to invest into high-yielding assets. So basically a crowdfunding, crowd lending, whereby you disintermediate a bank in the middle. This was the origin of peer-to-peer lending, which is why the name originates in peer and peer in the sense of two consumers. Today we're referring more to marketplace lending because the concept has moved on to many other areas, which is also an area that we are actually focusing in, which is SME lending. So we're not connecting consumers to consumers, we're connecting small and medium enterprises to institutional and experienced investors such as family offices, high net worth individuals, funds who have a way to invest into mid-size German Mittelstand companies without a bank in the middle.
Mm-hmm. How would you describe the main challenges for a startup following such a business model?
Well, I guess the main challenge is we're building a two-sided marketplace. So what you always have to keep in mind is that both sides need to grow at the same pace. And if you don't have one side, you don't have the other. So it's a typical challenge that many two-sided marketplaces have. I guess in our special case, it's the bit of a tricky part is that you need to have a track record to be able to attract investors, and you need investors to be able to attract businesses who would not come to you if they don't think that you have someone who's lending to them. So it's a delicate problem, but I think we found a good way to solve it. And we're working on it, obviously, to be able to grow both sides, as I said, at the same pace.
Mm-hmm. The European Central Bank has cut the main interest rate to 0%. Why then is it still difficult for small and medium-sized enterprises to obtain working capital funding despite this low interest rate environment?
I think it's not so much a question of money in the sense of liquidity. I think there's more than enough liquidity. I think what we're seeing is that people don't actually know where to put their liquidity. At the same time, on the banking side, I think it's a question of capital, and the two are not the same. So banks need to underpin their exposures with capital, and as we all know, since the credit crisis happened, the capital requirements have grown significantly by a factor of 2 or 3. So banks, as they need to manage their capital, they need to see where they can actually put their money to work, and mid-size or Mittelstand loans that are unsecured are relatively heavy in terms of risk weighting. So it's a question of capital more than liquidity. Okay.
So creditshelf also provides investors with an access to a new asset class, namely unsecured working capital loans. How would you describe the basic characteristic of such an asset class, especially with respect to risk?
Well, these are risky assets, I would say. I mean, they're not a typical investment that someone who has never dealt with risky assets before should invest in, which is also why we decided not to distribute our product to consumers. So we're not a platform where a consumer could actually come and invest. So we're focusing on people who have experience in investing. At the same time, we think it's a very attractive asset because the risk-return characteristic is, in our view, is very, very good, especially if you have a diversified portfolio. The reason is that if you look at it from a client's perspective, in the sense the small and medium-priced companies, they get loan access on a secured basis with their banks, where they pay relatively little, but they don't get the unsecured loan at all, because banks take a view to say, I want to lend to them secured, but up to a certain level, but I don't want to lend above. So they get, and as an example, they get a secured loan at 3%, but they don't get an unsecured loan at 6%. That would be the next step. The next best alternative is to go to a factoring company or to finance themselves through their suppliers, in which case they pay a 2% sconto every 30 days, which comes to 24% a year. So there's a huge gap between secured financing they get from a bank relatively cheap because interest rates are low and banks are still serving this market, and the next best alternative after they have exhausted their secured financing, which is relatively expensive in the double-digit range. So we're actually occupying the space in the middle where banks are withdrawing because they don't have enough capital or the appropriate risk appetite to serve their clients with an unsecured product.
Mm-hmm. Before founding creditshelf in 2014, you've been working for more than 10 years with UBS and Goldman Sachs. What have been the main reasons to start your own business for doing that?
Well, I think it's a combination of personal inclination, which has always been there, and a bit of frustration with institutional banking post the credit crisis. I think as banks were going through a reconstruction after the crisis, they need to define themselves new. You're dealing with huge apparatuses of companies, and it was very difficult to really make a change. And we were seeing that there was an opportunity, and it wasn't possible to do this within a big banking corporation. So we decided to step outside and try it on our own. And that is not to say that these companies are not doing a really good job. It's just this particular type of business that we wanted to do was not possible inside a big company.
Okay. Until now, 2016, this obviously has changed. For example, Commerzbank has also founded a marketplace for SME loans. How do you see the market environment with respect to competition for these business models today?
Yeah, I mean, we know the people from Commerzbank really well. They're also in Frankfurt, and we're in discussion with them. Obviously, it's a very friendly discussion, and we don't see this as a threat at all because we think that the market opportunity is huge. And there will not only be one or two marketplaces. At the end, there will be many. There's about 2,000 banks in Germany. Why should there be only one or two marketplaces in 10 years? We think this market is growing by a factor of 50 times within the next 10 years. I think that's what we're expecting, what the consensus estimates are. So anything that makes this concept more popular, I think in our view is welcome. And if Commerzbank, who has, I think, 30 or 40% of the mid-cap market in Germany, goes out to all their clients telling them that this is a great idea, I think this is something that we benefit from as well.
Mm-hmm. Thank you very much, Dr. Thabe, for sharing these very interesting insights with us. And we are happy and curious to see how this market and creditshelf further develops in the future.
Thank you very much.